Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Nifty continues to be above the 26,000 mark but sharply off the high. So consolidating at these levels, 26,000 continues to be an important level to track. Midcap, so well they are in the green today, but the advanced decline ratio that is in favor of declines as we speak. So that will be important to track, Vivek.
Good afternoon, Sonal. You're absolutely right. It's been an extremely volatile trading session, a certain recovery seen especially in the last half hour or so. But today we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Benchmark indices fall from highs to trade near the flat line. Nifty trades at near the 26,000 level. IT and realty notch gains while consumer durables drag.
Petronet LNG is higher in trade by 4% after it signs a 15-year ethane storage deal with ONGC worth 5,000 crore rupees. That will be the revenue addition for them. Nomura has a buy rating on the stock with a target, and they say the EBITDA addition will be 140 crore rupees in the first year.
Indigo Airlines parent Interglobe Aviation is facing rough weather over a rush of flight cancellations, which the airline blames on the weather, congestion and updated crew rostering rules. The airline hopes to normalize operations in the next 48 hours.
And shares of Biocon trade with cuts as the board is set to meet on December 6th to consider buying out shares of investors in its biologics arm. It also plans a fundraise which could help facilitate the buyout. Okay, all right. Those are the top headlines that we are tracking for you. We'll discuss some of them in greater detail. For now, the Nifty at the 26,012 mark. It is coming off from the highs of the day. The mid-caps up 80 points, but there is some pressure coming in on Bank Nifty. So what happens to that index will be key to watch because that could move the needle for the Nifty as well. Nifty IT doing really well. Realty also adding to the gains that we are seeing today. The CPSE index also doing well. But we do have, as I said earlier, the banking index seeing some pressure. And the small cap index too is in the red as we speak.
That's right, Sonal. Quite a lot of stocks. One amongst them yesterday that we did highlight, towards the end of the show was Biocon. An update coming to the exchanges where the companies are looking at both the share swap as well as a fundraise. That particular stock today has sold off significantly post that development. But this and a whole host of other stocks is what our association has on its radar. It's a special segment, Midcap Movers.
So I'll start with Biocon. As you were talking about, the board is going to consider fundraise on 6th of December, and ahead of that, the stock has moved sharply lower, down currently more than 5%, while Petronet LNG is currently higher, up almost 5% after company has announced an agreement with ONGC, and revenue potential is seen around 5,000 crore. On the back of that, stock is sharply higher. IndusInd Bank, there was a positive note from the promoter, and the tracking that development, this stock also has moved higher, currently up more than 2%. Some of the other mid-cap gainers, most of the IT names are today trading with gains, and yesterday also most of the names were higher because we have seen a sharp fall in the rupee over the last few sessions, and because of that, you can see Coforge currently have more than 3% persistent emphasis. All the other names are higher too. Hindustan Copper tracking the copper prices which have moved to record high, and because of that the stock has seen a gain of 7%. Majority of the defense names are today trading with gains ahead of Russian president's visit. Bharat Dynamics is one of the top gainers, currently up almost 2%. Last one in this list is Nectar Life. Yesterday, company had announced that board has approved share buyback of rupees 81 crore, and because of that, this stock too has moved higher, currently up more than 14%. Some of the stocks are trading with cuts. First on the list is Hitachi Energy, down for second straight day. Yesterday also was down almost 4%. Today it's down almost 7%. Recently, there was a government order related to renewable energy, and might be because of that, the stock has been falling. Second one is Keynes Technologies. For the last 6 or 7 straight days, this stock has been falling. Today also down almost 5%. MV Photovoltaic and Wockhardt have been seeing profit booking today after a big surge that both these stocks have seen over the last few sessions. And last one is Ola Electric, another 52-week low that stock has hit today.
Okay, a big fall there, 36 on Ola Electric as we speak. Thank you so much, Sudarshan, for joining us with those names which are in focus in the mid-cap space. We'll slip into a break now. When we come back, we'll connect with the management of Pine Labs to discuss their Q2 numbers and the business outlook. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular stock and within the past space that we highlighted on November 27th, saying that there could be a very important development as far as Tata Power is concerned. This was regarding their Mundra power plant currently lying idle on the back of the fact that, number one, the earlier long-term PPA isn't enforced yet, and also the Section 11 benefits wasn't extended post-July. In fact, on November 27th, we had informed our viewers that the company was very close to signing the PPA with the Gujarat government. This is a supplementary PPA, and other states were expected to follow suit. Now, in line with what we had reported earlier, the management, in an interaction with our colleague Lata Venkatesh, has gone ahead and confirmed this development. They are saying that the Mundra facility is an extremely important facility for them. They are saying along very similar terms and conditions in which the Mundra plant was operating under Section 11, they are expecting this particular facility to now operate under a supplementary PPA with the Gujarat government, post which they expect other states too to follow suit. They are expecting this supplementary PPA to be in effect and expecting complete capacity utilization till the year 2038, which is in effect throughout the tenure of the PPA. This is an extremely important development as far as Tata Power is concerned, given the fact that when the plant wasn't functional, the company was actually making a loss on the bottom line in that particular segment. Let's listen in to excerpts from that conversation that Dr. Praveer Sinha had with our colleague Lata Venkatesh.
Mundra is one of the big issues for Tata Power, and I can tell you that we are very close to finalizing it with the government of Gujarat, and it should happen very quickly. Any day it should happen. We expect that once this is finalized with the government of Gujarat, we will be able to take it to all the other 4 states. It's a win-win for everyone because this is one of the lowest cost producers of power. Very stable plant, and it supplies to all the 5 states at full capacity as per the PPA, and the arrangement will ensure that the plant operates fully right up to the end of the PPA term, which is 2038, and we feel that this will give new support and life to this plant, which in between has been running under Section 11 but should now run under the new SPPA arrangement.
When you say very soon, should we expect it in the 2025, in the calendar year itself?
Yes, absolutely. Within this month, I think we are just right there.
And how much time will the other states take to follow suit?
We already had discussions with all the 4 states, and they have said that as soon as the terms are finalized with Gujarat, because Gujarat is the major procurer of power, nearly 47.5%. So once that is done, they will also go ahead on the similar terms. Okay. And I think there is a lot of understanding amongst all the procurers that this is a good plant and they want power from this plant because it's a substantial quantum of overall supply that goes
Absolutely,
to each.
and the country needs power. What is the return? Will it be somewhat similar to what it was before this stoppage? Will it be similar to the Section 11 returns?
We are trying to work something closer to that. The actual details will come once the final approval comes from the government. But I think we'll be very close to that sort of an arrangement.
Okay, that is an important update for Tata Power, and it is expected to come by the end of this month itself. So we'll keep tracking that update. With that, we'll do one thing. We'll slip into a short break now. When we come back, we'll connect with the management of Pine Labs to discuss their Q2 numbers and the business outlook. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Pine Labs is the stock on our radar. B. Amrish Rao, the CMD and CEO of the company, is joining us now to discuss their Q2 numbers. We'll be discussing 3 main points today. Growth outlook in competition. The second will be contribution and margin outlook. The third will be ESOP cost trend and profit target as well. Mr. Rao, thank you so much for joining us today. Your growth in the quarter gone by, on a YOY basis, it has come in at 18%. On a quarter-on-quarter basis, it is 5.5%. What is the outlook for the rest of the fiscal? Do you think you'll grow better than that? What are the targets?
A couple of things. Over the last 5 years, we've generally trended to grow by about 25% on a year-on-year basis. The first 2 quarters are seasonally weak quarter because we are in the payments industry. As you know, the payments industry goes up along with consumption and purchases in the market. So generally Q3 and Q4 are the stronger quarters for us. Over the last 2 years, we've grown by about 30% on a revenue level. This year, at a contribution margin, we grew at about 21% for the first half of this financial year. We are fairly confident that in the rest of the year, our growth will be slightly higher than where we have come in the first half of this year.
Okay, when you mean slightly higher, you'll continue that 20-25% mark in terms of revenue growth?
Yes, we feel super confident about us being able to deliver in the 20 to 25% growth on a full year basis.
Right. Mr. Rao, what we want to understand from you is the segments that you operate in currently have several players. There's quite a bit of competition. Along with that, QR code-based payments is also gaining significant traction. A couple of analyst notes have highlighted this as a significant headwind. So how do you plan to navigate this, and how can you sustain growth at the current levels?
Let me give you just some basic information about the company. In this quarter, we processed close to about $50 billion worth of transactions, or about 4.1 lakh crores of payment transaction. That's a growth of more than 60% at a volume level. The top 5 banks in India all have Pine Labs as their primary partner. The top 3 petroleum companies, the top 3 e-commerce companies. We are winning in the marketplace. One thing which is real is we are bringing on new volumes, new transaction type. May that be on QR, may that be on card, or for that matter, when it comes to even BBPS. So when you and me do bill payments today, those transactions, we have now become the second largest BBPS transactions provider in the country. On the online space, we have grown by about 70% on a year-on-year basis. Just to use, a simple terminology out there, we think we are crushing it in the market when it comes to winning new deals and protecting our businesses.
Okay, so in terms of, we are also reading it from a note where they say that your distribution is still weaker than the peers because, as Vivek also mentioned that QR code, the acceptance around that for at least smaller vendors, that's picking up. So what kind of distribution plans do you have to improve that and take it to smaller centers as well, be it tier 3, tier 4 cities?
I'm actually not interested in that business. I actually want to call this out. So what we don't do is we don't have a single rupee of lending revenues coming into the business. QR code businesses are today greatly associated with lending on top of that once you have the merchant on board with us. We are the tech in fintech. So we don't do any lending, and hence that entire market of sticker QR or, just pasting a standy QR, that's not a market that I'm interested in. If there is a merchant which has a technical requirement when it comes to payment systems, has a certain workflow which needs to be incorporated using payments, that's the market that we are interested in. We really want to be a technology company. And by the way, we've been able to take the same technology into global markets. So you will most likely see us more in Singapore and Dubai than to see us in tier 5, tier 6 cities of the country.
Got it.
Mr. Rao, I want to ask another thing. In Q2, what aided, especially the bottom line performance, was 2 things. Number 1, a very sharp rise in other income, and number 2, a sharp decrease as far as the ESOP costs were concerned. Now, H2, how will both of these, segmental profits actually trend? And end of FY26, where do we end in terms of all of the 3 parameters?
Great question. See, look, I'll break it up into 2 parts, right? So the first part is when it comes to contribution margin and revenue, that if we can continue to grow it at about 20 to 25%, and then if we can keep the wage bill and the employee related expenses at 10% year-on-year growth, what we would have been able to do is we would have been able to capture a significant portion coming to the adjusted EBITDA line. Now, below the adjusted EBITDA line, we have 2 line items. One is around depreciation. So what we have been doing over the last 18 months is we've been actually asking more and more of our merchant partners or bank partners to procure hardware on their own while we just focus on the software layer. So what happens because of that is the depreciation line has come down from being almost about 12% of revenues down to less than 5% of revenues. Similarly, on the ESOP costs, those ESOP costs, which used to be about 8% of our overall revenues, now that has come down to about 4%. And one of the important measures that we've taken, and this is really the feedback that we got out of public markets, is that you've got to align ESOPs with the requirements of your investors. So what we have started to do is our ESOP cost is now pegged closer to the FMV or closer to the price of the stock instead of being at a deeply discounted at a number which is close to zero. Both these things have played out in our P&L. In my presentation yesterday, we actually showcased that for every 100 rupees of incremental contribution margin, we think we will be able to take somewhere between 50 to 55 rupees down to the adjusted EBITDA line. And to the PAT line, it will be, to the PBT line, it will be somewhere between 45 to 55 rupees.
Okay, so now that you've done those calculations and you have certain strategies in place, for instance, you don't want to spend a lot on the hardware so that depreciation reduces, and you want to mark ESOPs to market price as well. What does it mean for your long-term strategy when it comes to revenue growth, contribution margins, and will it also mean that you will continue to be profitable? Because as we pointed out in Q2, had it not been for other income, it would have been a loss, right? So what is...
No. I'm clarifying. In Q2, we are a clean PAT positive. In Q1, yes, there were some changes because of which the PAT came out positive. But Q2 was a clean PAT positive.
Okay, we take that point as well. The other thing we want to understand from you is, now Q2, you've actually seen strong growth as far as the international segment is concerned. And this, we're talking about the issuing as well as the acquiring business. Now, going forward, what is the kind of growth rate this can see? Also, what will be the kind of contribution you see from the international business as part of the overall top line?
See, first of all, let me just explain to you the lay of the land. See, what's happening is when we as a technology company, as a market leader in payments in India, are actually going out and speaking to global clients, for the first time, I'm getting to see that clients truly believe that you can deliver for them in global markets. So may that be in Philippines or in UAE or Singapore, they are no more doubting Indian fintech. Second, when you say that you're a market leader in that space, people really want to come in and work with you because the technology that we have created in India is ahead of what has been happening in some of these other markets. So for us, we do believe that there is an immediate product market fit when we go into global markets. And we today I would like to say that almost about 300 to 350 people in international markets, both solving for delivery as well as in terms of looking for new businesses. So we've now presence in Australia, Singapore, UAE, Philippines, US, and we'll want to continue expanding that.
All right. Mr. Rao, a lot more questions, but we are completely out of time. But thank you so much for explaining the Q2 fine print and the outlook going forward. That's the word coming in from Pine Labs. By the way, as we speak, the markets have come off from the highs. The Nifty is below that 26,000 mark. When we started the show, we were in the green, but that has been sold into. And that's Bank Nifty, which is leading to the losses that we are seeing currently. Bank Nifty down around 250 points, 0.4% gone on that one. Even the Midcap index, the advanced decline ratio has worsened in the favor of declines as we speak. With that, we'll actually take your leave on this edition of Midcap Radar. Stay tuned, MF Corner when we return.